Hi, my name is Jim Hilborn,
And I'm Tom Dinas.
and we
Oh, the
small business doctors.
And I've been taking care of business every day. Taking care of business every way. I've been taking care of business. It's all mine. Taking care of business and working overtime.
Doing good?
Good.
We ready to do this thing again?
I am ready. I'm ready. I'm excited about this one. I kind of like it. So
You need a life, Jim.
I do, but no, this is my life. Small business doctors is my life. So we're talking tonight about whether or not you may have a business, you may have a hobby. Have you combined those two? Is your hobby has become your business?
Or
And-
your business become a hobby.
or has your
It
business
could go the other
become
way
a hobby?
too.
It can become
Yeah.
the other way. Exactly.
Yeah, we are going to go in depth. Some of it might be a little boring.
I think not.
Yeah, but because it's a lot of stuff about what the IRS thinks, and we don't really care except for the fact if when they audit us, we get
You know,
real
I
interested.
was going to say, I've never been so interested in my life as the time I got audited. So,
I just hung on every
Every
word,
word.
didn't you? I agree. And you and I have talked about this. Like, usually the conversation of this always starts with, how long will I be allowed to take losses before I have to close down my business?
exactly.
Because they hear these part of the tax urban myth that's out there. You have to show, you have to make a profit in 2 years or 3 years, or otherwise you can't be in business. And that's all hogwash.
Hogwash.
Yes, that's a southern term. I'm not sure if you're
I believe
familiar
that's
with
right.
that one.
No, I wouldn't know what that meant.
But anyway, where this comes from is in the IRS manuals and their auditing procedures. They have what's known as a safe harbor. And the safe harbor says is that if you have a business and we think it has some personal pleasure in it, that
God forbid.
oh, nobody should have fun as far as the IRS.
This is
concerned.
work.
Oh my God, yeah, it's all work. I don't care what it is.
If I have to work at the IRS, you have to suffer too.
Anyway, if you show a profit in 3 out of any 5 contiguous years,
Exactly. Okay.
then there's a presumption that it is a profit.
Presumption.
Business, a presumption, okay, and that you're free and clear. Now, this can't be that you show $300 profit, $50,000 loss, $600 profit, $30,000 loss. That's not going to cut it. They have to be reasonable and they have to be comparable, losses and gains.
And the question is, are you trying to make a profit?
Exactly. We
Are
talked about
you
this before.
in
The
business?
magic thing. How do you turn a hobby into the business? You go in front of the steps of the courthouse and say to the world, "I want to make a profit."
That's right.
Because the IRS says you do not have to be a good business person. You just need to be sincere.
That's
And
right.
sincerity is all about whether you want to make a profit with this business.
And
Now, the
have-
3 out of 5 rule, interestingly enough, there is 2 parts of that. And the other one is for a lot of times horse people, horse breeders, because it takes longer times, and other types
And
of
they
animal
know
breeding.
better people than you know.
Yes,
They
they're,
know
they're
Congressman,
connected.
you don't. That's
Yeah,
right.
they got 3 out of 7 years.
That's right.
So they get an extra 2 years to put it together. And so they have other benefits, and we'll get to some of that a little bit later. But
Horses.
yes, horses and cattle, they spell it out. Not llamas, though. I think llamas were still in the 3 out of 5 period.
There you go.
So llamas were real big in the Northwest for about 7 years.
Yeah.
So.
Till they started reproducing.
Yeah, and everybody got their breeding stock, and then they go, now what do I do with them? I used to joke with my clients, well, you can make, llama burgers.
Exactly.
They didn't think that was funny.
No, they
They
didn't.
get
The
attached to
alpaca
them.
burger thing.
No, that didn't go.
Remember Keiko? I was,
So-
no.
So, and someone say, well, what's the big deal? So
Yeah.
they say it's a hobby.
Right.
Well, the big deal is that this issue arises upon audit. Now, one of the things you must realize is that a Schedule C, which is self-employed, losses when you have other sources of income like large wages or rents or whatever
Or even small wages or rents,
Yeah.
or that.
is the highest audited tax return you can have.
Right.
All right. And one of the issues they look for, and the IRS is renewing their interest in the hobby loss stuff because of need of revenue. So, when
Well,
they come in,
Two things, Tom. I think and here we are in 2011, I think that we have more people trying to create a revenue stream out of their hobbies because of the poor economy.
oh, definitely.
Yeah, so I mean, there's two things. One of which the IRS sees this spike in people reporting these sideline businesses. And secondly, they're going, and secondly, there's this pressure from above to create taxable revenue. And believe me, there is that kind of pressure.
Oh, definitely.
Yeah.
Although oddly enough, and I've not understood this over the last probably 20 years, if your primary source of raising revenue is the IRS, they consistently underfund them and cut their funds back. It's a dichotomy that I just don't understand. There's a rationale there somewhere, but I don't quite understand it.
I don't either.
Yes.
And, I think there's conflicting. Obviously, somebody wants them to be underfunded. Some other people want them to be
Senators
overfunded.
that have been audited in the past probably.
Well,
is
who
one
have
camp.
constituencies and who, who say, we really, I know that it's fun for the government to charge me a bunch of money for taxes, but we really don't want them looking over our shoulder.
Yeah.
So I think that, there's got to be that happy medium, and clearly the IRS could grow, as big as you wanted it to be, really.
So, but anyway, so the big deal is you get audited. They come in and they raise the hobby loss issue. You have a nice photography shop, and so you're generating some revenues, but you've been showing losses every year. And so they can go back at least 3 years, and sometimes up to 5 in extreme years, if they feel there's tax evasion involved in this issue. And they can throw out all those losses. So you've been saving $5,000 a year on taxes for 3 years, so you're going to have to pay $15,000 back to the IRS,
With interest.
plus interest, plus penalties.
Right.
And so by the time the bill comes due, because the audit gets finished up, some of those returns are now 4 and 5 years old because they started the audit a year and a half ago by the time it goes through the procedures. Some of those earlier years could double. And so rather than $15,000, you might be into it for $20,000, $25,000.
Which
So
is bad.
bad. We don't like that sort of
No,
thing.
we don't like that at
so
all.
you want to fight it and say we are a business. If it's a hobby, also when they make the changes, what they do is they take all the income and you report it as miscellaneous income on the front page of the 1040.
Right.
So
Okay, that's right.
Yeah. So it raises your AGI, which might limit things like medical deductions.
AGI, Tom.
Adjusted gross income. I'm
Okay.
sorry.
Okay.
I've been speaking this stuff for so long, I can't help myself. I'm actually in a 12-step program for not
Okay,
using
I'm hopeful of that.
But,
and you've
yeah.
accepted it. That's
yes,
good.
and
all
I
right.
deal with it, and I stand up in front and tell them.
Okay.
But anyway, miscellaneous income raises your adjusted gross income, and so you lose some of your deductions, some of your medical deduction. Also, might push it high enough where you start losing some benefits from rental properties because you make too much money. And there's all these adjusted income levels for all sorts of deductions. Could be credits for education, and earned income credit, all kinds of ramifications. And you don't get the deductions except as an itemized deduction on your Schedule A. So if you itemize deductions, at least you get some benefit. It's limited. But if you don't itemize deductions, you might not get any benefits at all. So it
What,
might
pray
raise.
tell, is our Schedule A?
That's itemized deductions.
Okay, then.
Medical. Glad I got Jim here to keep me straight. He humbles me sometimes with his ability to talk minutia. But mortgage interest, property taxes, medical expenses, charitable contributions, that's
Okay.
schedule. So
Okay, so,
it's-
and if we are itemizing, typically we would have a Schedule A. Typically, if we had our business, we would have Schedule C. But when we have a hobby business with a stream of income, it would be under miscellaneous income.
Yes, and itemized deductions. So
Right.
if you itemize your deductions, you're going to get some benefit. But if you don't, you might not get any benefit at all.
Right.
And then you only get these deductions to the extent that you have hobby income. So you could break even but never show a loss. That's why the audit can be so crucial, is that it takes away all your
the
losses,
losses.
all your losses, and so you have to report all that is income and for each year that they audit.
And from our point of view, and we have several programs, lots of programs, in fact, a lot of programs about guiding small businesses and explaining the legal and tax ramifications of decisions that you make as small business people. So we understand, I think Tom and I expect small businesses to start out breaking even, losing a little bit of money. It's not very unlikely at all that would be the case.
Oh, almost all small businesses in the first couple years will show some
We'll suffer
losses.
a little bit.
Yeah.
You're capitalizing. You're buying things to create a stream of revenue.
But a real business can show losses for 20 years
Sure.
and still be all deductible. You know,
So
the
long
3 out of
as
5.
they intended to make a
Yeah,
profit.
as long as this is a big case where the intent of the taxpayer is extremely important. And the intent is shown by how they operate the business.
That's right, because we can never know what's between somebody's ears.
That's right. I've
Can
been
we?
saying that about you for years.
Exactly,
Yeah.
and so have lots of people. And but slowly but surely they come to realize that it's worse than they thought.
So that you look at, the IRS, and IRS has on on their website, you can get their auditor's manual about what they look for.
Sure.
And so I looked through some of this stuff, and what is the IRS's position? You want to know what they're thinking. Excuse me. And one we already talked about, there must be a profit motive.
Right.
Okay. It cannot be a flawed business plan. You can't have something that no matter what you do, you cannot make a profit.
So in other words, if you're buying, say if you're building a widget and you're reselling the widget at the little market, and you really like making little widgets, which that's
It's a lot
kind
of
of
fun.
what the fun part of it is.
Yeah.
And you're putting them together for $5 and you're only getting $4.50 out of them.
That's
a
a
flawed
hobby.
business
Yeah, it's a
plan.
flawed business plan.
So
They
you're
could-
really, and people will do that in order to kind of, I can't make all the money back that I put into my hobby, but I can get a little something back, and that,
And I can buy all this neat equipment that I always wanted, and a third of it's paid through taxes. Isn't this fun?
and you can't do that. You
They
have to
can't do
be
that.
trying to make a profit, and so your widgets, or whatever it is you're making, has to be priced accordingly.
Yes.
It doesn't always work out. We understand that.
And there must be economic activity. And economic activity is, there's buying and selling. And
That's buying and selling.
Yeah, and I have clients, they've retired, and I'm gonna still do my carpentry work, and they do maybe one job a year.
Right.
And they make $400 or $500, and it's like, you have to report that income, and then you fall into the hobby loss
Pretty
rules,
much, yep.
because there's just not enough activity, good grief, in order to justify saying that this is a for-profit business.
So you're driving around with Jim Hillborn Carpentry, and we got the truck, and we're writing
Yeah,
off
there
the
we go.
telephone, and
Oh,
I'm still
yeah.
a carpenter, but I'm only making $500 a year.
And I just
Not
bought
gonna-
this great new pickup
Right.
that's $40,000
For the business. For the
yeah,
bu-
for the
yeah.
business.
Yeah,
and I got a magnetic sign on it and everything
and
now.
everything looks good. The
Looking
telephone
good.
number. This is Jim Hillborn Carpentry, or
Right.
and it won't work. They're going to look at it and say, "Well, you only made it's clear."
Okay. Then they're going to look at the manner in which the business is operated. Are you operating like a business? Do you have complete and accurate books? Number one. In all the court cases I've looked at, that's one of the first things that's always a reference. They didn't keep books. They had just, scattered information. They had receipts in a box and didn't have them summarized. All
They're
sorts
putting
of
the
things.
money into their private checking account.
Yeah.
What-
And with the sole proprietor, that isn't a total killer, but it's
No.
not a good sign.
But when the burden of proof, that is the burden of proof means that you have to prove it's more likely than not, but that burden falls upon the taxpayer in this situation. Am I right?
Right?
And
Yeah.
then, so where are we now? We have to do things in where that it is a proof of, not proof against.
Right.
So
Okay. In manner, do you have business cards? Do you have
Do you-
do you have a phone listing in the phone book?
exactly.
Do you advertise?
Do you have a web page?
Do you have invoices?
Do you have invoices?
Yeah. I mean, all these. Fortunately, there's software like QuickBooks that can solve
Oh.
a lot of these problems for you. There's really no excuse not to have some of this stuff now. I mean,
No.
if you get caught on some of these issues, it's just negligence on your part.
Well, it is, and
Yeah.
that's what we're having this class for and this tutorial for, is because we don't want you to fall into that trap, because
Right.
there's a lot of people who are serious about trying to make they're trying to change from working for someone else to their own private business or working a hobby, and Tom and I have, well, we talked about several, even fishing guides and hunting guides, things you would think, well, boy, the IRS will jump all over that. No way that'll ever happen. Well, sure it does.
Yeah.
It
and,
can.
And I've had them audited.
And
Yeah.
but what you need to do is and from a legal point of view, we've talked about, I think we did, this has come up before, have a business name.
Business name. That's right.
Have a name, have the name registered, DBA,
Yeah.
It doesn't have to, it can be Jim Hilborn's, toys, Jim Hilborn's quilts, or Jim Hilborn's fishing guide.
Right.
Make a business out of it. Keep books.
Keep books, advertise, do what other businesses do.
That's right, because after all, we are trying to prove something here. We're not innocent until proven guilty in the tax world.
Right.
We have to prove our deductions.
Right. And, and there's other things you can do. You can have budgets, because businesses budget out.
Yeah.
What are my revenues going to be? What are my expenses to be? You do financial projections. Okay, if I did this, and I raised my income to this level. In the era of electronic spreadsheets, it's very easy to do this stuff.
Yeah.
And you can do very nice things. You print it out, you put it in a little binder, you get audited. These things go a long way to proving your position. Are you doing what similar businesses are doing? Do you have to go to classes, and are you attending classes like that for professional development?
But the idea that Tom has to go to classes, he has to get, what do they call it in the
Continuing education,
and then
30 hours a year of that.
Oregon State Bar calls it continuing legal education. We have to do 15 hours a year. 60-minute hours too. I mean, they count.
Yeah, click, 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 click.
Okay, I'm paying attention, boss.
Yeah, are you subscribing to professional magazines or trade magazines that help inform you about what's going on in
Right.
your industry?
Members of trade associations.
Yes. Have you enlisted the aid of tax or legal advisors?
Always important.
Yes, it is, especially for our cash flow.
That's right.
But it's also important as far as in the eyes of the IRS, whether you're in business. Do you
have a lawyer?
Do
Do
you
you
have
have
a lawyer? Do you have an accountant? Do you have an insurance
Financial.
agent? Business insurance agent. Are you carrying liability insurance? Do you have some of these things?
Right. If you need to be licensed, are you licensed? Because if you need to be
Oh,
licensed
that
and
could
you're
be-
not, you lose.
Well, not necessarily.
Really?
I think you
Has
can
it been-
get, but most of the states and the IRS have reciprocity agreements. This audit information will go to your local state, and the state might pass that on to the contractors board or whatever, licensing board. So that may come back to haunt you.
Do you think? Okay.
Yeah,
right.
you don't have to operate legally. There's been court cases where marijuana dealers were
All right.
picked up.
This is fascinating.
Yeah, and they called themselves an import-export business, but they reported all their income and all their legitimate expenses.
Yeah.
And they passed the audit.
The Al Capone rule.
The Al Capone rule. That's right. Yeah, if he had paid his taxes, he would have never gone down.
That's
never
right.
gone to prison. But yes, and the IRS is bound by, I guess, their confidentiality. They really can't pass that information on. So yeah, you just. I tell my clients, it's an honor system, and but you need to report your income and report
Sure.
your
Oh,
expenses
yes.
responsibly. You can
Absolutely.
be aggressive, but you have to have good records. Better records, more aggressive you can be.
And I think that you ought to have a legal entity, and that you ought to operate as a business. So in other words, it's I suggest to people that they not be a sole proprietor, that they actually form that sort of LLC,
LC.
small corporation.
Right.
Either make it a C corp or a small.
That helps. The LLC is a disregarded entity for tax purposes.
is.
And the
It is.
IRS does not recognize it. It was started by the states, and there's no tax law concerning the LLCs. And what they say is, well, if you're a single member LLC, you'll be taxed as a Schedule C sole proprietor. If you're a multi-member, you're a partnership.
And I understand that.
But, yes,
The fact that the forming the entity of registering with the state.
Gives you
is-
more credence as a business.
credence
I
into
agree
that.
wholeheartedly.
Yeah,
Some states it's a little more expensive, and so that creates.
Yeah, I think-
California is one of the worst in that area.
And you may, state to state, you might just want to think about that as a cost benefit. And if it's a very expensive process in your state, then you might say, oh, well,
Not
okay,
worth it,
what
yeah.
else can I do?
What
then?
else? Yeah, and
'Cause
that
I
you know,
can't-
and you have to realize there is no one item that we're going to talk about that they'll look at and say, "Aha, you failed based on this point."
Yeah.
It's the preponderance of things, of good things versus bad things.
Yeah, I wanted to touch. We kind of went too fast for me. I know, hard to believe. The business plan is, the business plan. Oh gosh, why would I do that? Business plans sort of as an indicia or kind of an evidence of us being a legitimate business. Also a pretty good exercise to help you focus. Oh, okay. I think I am gonna. How many of these things do I have to sell to make $10,000? Mm-hmm. And what do I have to price them for? And how much can? Oh, well,
How long is it going to take me to do it? What am I going to make per hour out of my time?
Exactly.
Maybe I get a job someplace else and being a customer rep at Lowe's or Home Depot or something like
whatever.
that.
Yeah, exactly. Anything, but so is this going to be worthwhile? And that really that's really when you start making these decisions about, this really can be a business or if I'm making $3 an hour at home, maybe that's good, maybe that's bad. Sometimes you think, well, yeah, but I've got to be, I've got to be up from midnight till 2 anyway, waiting for, and so might as well be busy.
Right.
And so there is that, but certainly a factor is to, am I making a living? Am I, by making a living, I mean per hour. Am I getting paid?
Yeah, and maybe you're not going to hit it, and maybe you're going to wind up showing those losses for several years. But the thing is, what you want to do is be able, if you get audited, that if you have those losses, you keep them and keep the tax savings from it.
Right.
And maybe your plan won't work.
That's
And
right.
it
You may
happens
not
all
be
the
able
time.
to make a successful business out of this, but one of the things that what we're talking about is that you're doing something you love, you want to make a business out of it. Great.
Yeah.
Outstanding. We're on your side. That's what we do.
Right.
But you don't want to get hurt later.
Right.
over
And that's
this
the thing. We want to protect you, keep you from getting in trouble. Can't
Yeah.
get you out once you're in, but if we can keep you from making a mistake, we've
That's-
done our job here.
Haven't we said that before?
I think so. It's kind of
believe
deja
we've
vu
said that
over
before,
again.
yes.
Yeah. Another thing the IRS will look at is time and effort spent. If you're spending 2 hours a week, they're going to go, I don't think that's so. But if you're putting a lot of time into it, and so documenting your time, keeping your daytime planner, where you're going, what you need for your mileage deduction anyway, how much time you're spending doing this, how much time you're spending on your records. Do you have another job at the same time? If you withdraw from that's one of the audits, with the one on the guy who was a guide, and he got fired from his job because he took time off to do the guide work.
Yeah.
But we were talking probably $50,000 in taxes, and the bill would have gotten substantial because we had huge deductions for all of his hunting and the boat and everything. So it was an enormous deal. So.
I was going to, that time spent on the job. I will say that there is that funny little story about there's a fishing season in Alaska for herring roe. It lasts 12 hours. You can make $50,000.
12 hours.
In 12 hours. It only is 1 day a year. So that's a legitimate business.
Yeah, that's because you're making a profit too.
That's right. You're
So-
making a profit. Yeah.
Now, there's another get out of jail free card on this whole thing, and that is if the underlying assets of the business are increasing in value. This is where the horse breeders come in. This is where farm losses have been
Nursery.
overlooked, nursery stock.
Yeah.
Yes, because the value of the land has been exploding over the past so many years.
Sure.
And probably not so much now. I imagine farm properties have suffered as badly as all other properties. But that's one of the reasons we don't see as many audits in farms as you do in Schedule Cs, the self-employed one, because they know if they get in there, the land is going to pull them out of this deal because
Holding
the
on to
underlying assets, and maybe and other things that might be. There's not too many places where that applies. There's real estate issues. There's, the farm, but most of the stuff that you're using, brick and mortar is good, but things like manufacturing and machinery depreciate. So you
Vehicles,
can't
all
get you
goes
can't
downhill.
get you can't get bailed out on that.
Now farmers live poor, die rich. Mm-hmm. Yeah.
And the other one where your assets start getting greater than your losses. Now there's another one. Have you been successful in other businesses? Because there's a presumption if you've made money in other businesses, you'll be successful in this one.
Sure.
Even though you've got losses, an astute business person knows the risk, knows acceptable losses, and at some point in time, he'll get it turned around, even if he doesn't or she doesn't.
Still legitimate.
Still a legitimate business, and you can, and they can say it's a hobby. We're going to disallow it. You fight, and you bring back all this other. Like I said, it's one of the most litigated parts of the tax law in
yeah.
the self-employment area. Let's see. We have history of income and losses. Sometimes losses are unavoidable. Early years, lots of startup expenses. You can say this is just normal startup expenses for a small business
Had to buy
with
that
our
machine,
lowest
had to buy- yeah.
lowest revenues, and so we're going to have losses. Losses are due to customary risks, just normal fluctuations of the economy,
Exactly.
slowdowns. Losses due to casualty type things, fire, theft. They have to disallow for that, or they can't bring you down because of a major catastrophe like that. Those will help bail you out. And then they look at the history of earned profits in relationship to the losses. You can't have, like I said earlier, you can't have $50 of income and $200 and then $50,000 of losses.
Right.
They're going to look at things in
Of course,
relation.
and that
yeah,
only makes
that's
sense.
only
Yeah.
makes sense. But you'd be surprised how many court cases there are on it.
Oh no, I'm not surprised at all. But yeah.
And then they look at the financial status of the taxpayer, and this is where there can be problems. If you have large income from other sources, it means you're putting a lot of energy in there, you don't have much time, and you're taking all these deductions for things that aren't producing a lot of revenues, so maybe all that video equipment you're getting and woodworking equipment maybe isn't going to be production.
You're gonna have to. You're gonna have to. That's when they're starting to look at you. So we gotta. Okay,
But now, a
Tom.
plus for you is if you rely on the income from that activity. So
Right.
that's your only source of income. So you're running up credit cards and you're taking 401k plans out to get this thing going. No, that's not a hobby. That you're putting everything at risk on it, so that counts.
Sure.
And then the thing they always go for, the element of personal pleasure.
We hate that. We hate that, Tom.
We do, yeah. Nobody has fun working.
No.
But the IRS looks at it in my guide, and I had another guy who turned his motorhome into a fishing bait shop, going around to the different
love
lakes. Yeah,
I
I
love
thought
it.
it was good. Yeah, we worked on that one. It got a little dicey towards the end, but it actually, because he put a lot of effort into it and did all the other things, came for the advice, followed it. So now the IRS has really expanded the looks in this stuff, so be careful and watch out.
We'll see you next time, folks. Had to cut.
Bye.
Taking care of business.